And welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this sunny Monday. I hope you all had a great weekend and I wish you all a successful trading week ahead and a good start into the new week. Now, before we jump into it, as always, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using in this live stream / videos, to the charting software, the broker, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I recommend if you're tuning in for the first time is to actually check out the Elliott Wave principle that you can read online for free when you're using the link down below. Now, with all of that out of the way, let's jump into it. We can see we have a slightly red start into the day, nothing too major. And for this week's, we have our $30 GameStop covered calls that are expiring on Friday. Once the market opens, due to the theta decay over the weekend, they should actually jump into the green. Despite the slight run-up that happened last week, in my opinion, that should still work out. Either way, I expect them to expire worthless and to pocket the entire premium at the end of the week, if we don't roll them out or basically buy them back and get other longer dated call options instead. Now, looking at the chart, so for GameStop, we saw last week we had this slight upward movement. Again, I still expect, or I still believe, that we're currently still in a downwards pattern that will take us down into this area here, because we have the 78.6 retracement level of the entire upwards movement here, and in combination for that, or to that, the 100% expansion level, assuming that this is a free wave corrective move. If this is instead some combination of a corrective move, it's possible that we that we had our low or end of the correction already here, in which case it would be possible that we're going up this week. However, I really don't expect it. Now, if we look closer, there might be a little bit more room upwards. If we look on the 1 hour chart, we see here that this might be 1, 2, 3, 4, 5 in progress. So there might be a little bit more room up to, let's say, roughly 2250 before we get another push down, followed by maybe another push up, and then the continuation of the downwards movement. So again, like overall, I expect, based on the daily chart and also the 8 hour time frame chart, that we are indeed going to see another push further down before we're going up. But as said, there's also a variant where we would go up sooner. Either way, I'm gonna hold on to the shares that I have outside of this portfolio at the transfer agent computer share, and on top of that, we're gonna write covered calls at 30 or higher against the shares that I'm holding here. Ideally for me, of course, we would move sideways till Friday or maybe even a little down. Our covered calls expire on Friday, and then and then next week we would go up. That would be the ideal scenario, because it would allow me to sell or pocket higher premiums. So that much about GameStop. If you check the episodes, I think a week ago or 2 weeks ago, in most of them covered the whole thing in a little bit more detail. Moving on, let's go to Novavax, the one thing where we're expecting to either get our confirmation for a triangle pattern, in which case we would expect a little bit further movement down, or to get a strong move up to confirm that the correction indeed ended here. Either way, the mid or long-term outlook is green here. So I expect that we'll get movements that will eventually take us into the $30 to $60 area. Now, to that end, I hold a call option that expires in January. $20 call for January here. The risk is not that high, $90 or so, or $95, and the payout would be like 10 to 1. So it's also not a fortune, but it's still a nice payout if I'm right, while the loss is really neglectable if I'm wrong. Other than that, we had strong movements in real estate. We're not invested there, but I pointed out during one of the last couple of episodes that potentially the correction might have finished here, considering with the overlap of the 50% retracement with the 100% expansion level for an ABC move. We then got this strong movement up here. Now the big question will be, that might likely be the next wave 1, wave 2, wave 3, wave 4, and we right now are potentially in a wave 5. So there's still a little bit room up to ballpark it, depending on where the official end of that wave is. So to the 30, yeah, so there's still 100% and a little bit more in room up. Assuming that correction is finished here, it's also possible this is some kind of flat correction, in which case we would get A, B, and first another push down, which would then also adjust the or impact the potential profit areas here. Yeah, so that about Wheeler Real Estate. Now looking at some other stocks, Barnes & Noble is breaking even right now. We actually thought that potentially we finished a corrective pattern here already based on A, B, C. So I pointed out last week that it looks like this might be A, B, C finished and we're now in the upwards movement, but there's still the possibility that we haven't finished it yet. Now with that low here that went a little bit lower, we have the confirmation that there is indeed still a little bit more upwards movement to come. Potentially the whole thing would now look like this and give us a 100% target at the 61.8 retracement. So expect that we will go down into the area to $8.30, $8.40 before we see the next push upwards. Theoretically, we could already be done here because we also have the 50% retracement here close to the 61.8 expansion level. But looking at this with the naked eye, we have 1, 2, 3, 4, and either 4 isn't finished and we go a little bit up and we should still get our wave 5. So I expect that we still will get a push lower. If we indeed will reach the 840 area is another question, but I expect that we will break through the 50% retracement level here to finish this corrective pattern before we continue our journey up. Moving on. CrowdStrike, yeah, I mean, they obviously were dumping hard when they took out the whole internet. We pretty much labeled or forecasted the downwards movement, and yeah, we don't have everything on the chart anymore. And already, it's been a while since we looked at it, but I recall that once that movement here started, we pointed out that there is a recovery phase. That recovery phase actually is a little bit longer than expected because I think that the overall downwards movement is not complete yet. We have, in my opinion, here 1, 2, 3, 4, 5, 5 waves down, and now one A, B, C, and C in progress. So I think we'll get a little bit more upwards movement before we then, for whatever reason, will continue the journey downwards. We can see that we're close to the minimum target for wave C. The maximum target would actually be here. So yeah, it's something I would stay out of simply because it's hard to guesstimate or estimate how high we'll go before we continue the downwards journey here. But yeah, so moving on, what else do we have that's worth looking at today? Immersion still moving, oh, slightly down. Okay, so maybe we get another push down. We've been waiting for quite some time to either get the confirmation that we indeed finished our corrective pattern here in the area of the 61.8 retracement and the 100% expansion level. We're still good here, so it still would check out like this, and it's possible also that this is in some form developing in some kind. We would have to zoom in and try to label it, but it's possible, as I said, that this is not a triangle pattern. Yeah, so we'll just have to keep an eye on it. If we break below 845, or technically if we break below 841 here, then there is another push down to come, in which case we would have to consider the 78.6 retracement as the next turnaround point. Otherwise we would still, or otherwise right now it's still a valid assumption that our correction finished here and that we get our next upwards move relatively soon. No, likely the weekly chart will not load, but we're still below 30 cents and still above 20. Again, I expect it to go down further. And costs, yeah, costs, we're still on the 50% retracement level, and we're still in an area where this could indeed be the next upwards movement, or alternatively the moment we break below the 652 mark, where we actually will get another push further down to the $5 area. Maxim we can leave out, although it's anyway having a bad start. So there, yeah, like, I mean, patterns became invalid here. So right now we basically with the naked eye can see that here we have some kind of ABC corrective pattern, which will be followed by another 5-wave move downwards. Overall, we can see here 1, 2, 3 touches the 238 extension level of wave 1, 4, and now we are in wave 5, which means we can actually also roughly forecast the target areas for the 5th wave where an entry might be reasonable. If we do that, we can see that our target areas are between the 6 cent and 4.60 mark. So if we sublabel this here, that's likely wave 1, 2. So can draw that one a little bit back since it's not relevant for the future movement. And if we sublabel this here, we can see that our target area for the third wave would already be here. So I expect that this will play out as 1, 2, 3 around the 6 cent mark, 4, and then wave 5 takes us down to 4.60, which would be the point where one could consider buying, and at which point I might actually, so around 5 cents or lower, I might actually also grab a couple hundred of shares, because at this point it's just cheap, and risking a little bit of money for something that, given some positive news, could go quite high, might turn out a risk worth taking. Obviously, it's hard to catch a falling knife in that case, because like even if that is the fifth wave, there's no guarantee that then we will see a complete turnaround. There should, however, be, as said, another, for example, A, B, C pattern at least playing out. Yeah, we'll have to keep an eye on that. So let's just reset the scale here. Moving on. Novavax we already had. Nvidia moving sideways. From the looks of it, we have 1, 2, 3, 4 and are currently in wave 5. So we should this week potentially expect another move up in the area between 118 and 128 to potentially finish this fifth wave before we then get the next corrective move. SMCI, yeah, there is said we also have multiple overlaps here that would point towards the end of this corrective pattern. So it's a potential good entry if it weren't for other stocks that just look more attractive, like for example Novavax at the moment. But yeah, I believe that from here we actually have a high chance that we finish the corrective pattern, considering how many forecasted yeah, like wave targets or profit areas or target areas overlap here, that this indeed marks the end of the correction, and from here we are going to go up. Now moving on to SPY. In SPY, we are in the target area for a fifth wave. The question is, did we indeed already finish 1, 2, 3, 4 and are in 5, or will we in this case actually exceed the level here? However, personally, I'm gonna wait for the next corrective push, because if this is 1, 2, 3, 4, 5, then we should get the next corrective wave, or it's gonna be the top and we get a bigger correction downwards. Either way, so I think for the upside, there is not much room anymore, and the risk reward ratio is definitely not good enough. Whereas waiting a little bit and then either trading the downside or just labeling the downside to wait for the next entry levels makes the most sense. Nasdaq. Yeah, so looking at the Nasdaq, we have a similar picture. 1, 2, 3, 4. 4 turns around at the 161.8 expansion level for wave A, B, C. And from here, we should see 1, 2, 3, 4, 5. We are in the target area for wave 5. There's still a little bit room. One would have to look closer and label the subwave to determine how likely it is that we'll actually exceed the 100% target. It happens on occasion, but not very often. Either way, as for an impulsive wave pattern, we already fulfill most of the rules and requirements. Although in that case, that has to be a leading diagonal or an ending diagonal, actually. 3 waves, then that would have to be 3 waves, and this would also have to be 3 waves. So depending on if this is the start of a wave as a wave 1 or a wave 5, it has to be a leading or an ending diagonal, considering that this wave here enters the territory of wave 1. Either way, it marks or it points towards a little bit more room upwards, but again, in my opinion, not enough to justify entering here anymore. Yeah, so again, short term, more room upwards, followed by the next corrective pattern before we then either see that we're in for a bigger correction or see that we are in for another 5 waves up. And yeah, that's actually already it for today. There's not much to do for this week, to be honest. In my case, it's monitoring GameStop a little bit and then deciding if or when to close out my $30 calls that expire on Friday, and then what kind of calls to sell or write for next week. Other than that, most of the other positions I'm holding are obviously so small that I don't have to actively manage them, and they are just like, yeah, like either they get into profit at some point or they will turn into a write-off. And yeah, so I said that's it. I hope you were able to take something away. Don't forget, if you haven't already done so, check the link in the description below where you can read the Elliott Wave Principle online for free or get a physical copy if you want to. Again, thanks for stopping by. I wish you all a successful trading week and hopefully see you then tomorrow again, roughly 5 minutes before market open, with another episode of